What's going on YouTube? My name is GT, and if you're new to this channel, we provide meaningful information around fitness and finances through interesting conversations like the one we're gonna have today. Let's get right into it. So in my last video, we were talking about AI and how Donald Trump is very bullish on the AI space, but it's beyond Donald Trump. It's global. We're seeing China getting into the mix, DeepSeek AI and beyond. And so AI right now was taking a space. But in that video, I provided a stock that I saw on the horizon was going to go on a run. And at the time of the recording, it was $33. And I gave the alert that it would run up to at least $50. Well, today, at the time of this recording, it is already touched and surpassed $60. So two things I want to say. Number one is that in the comments below, if you saw the video and you know the stock that I'm talking about, put in the comments below what the stock was so that the people know you're paying attention and you're making money off of these videos. But number two, I'm going to drop another stock in this video, but I'm not going to put it necessarily at the beginning nor the end. But it's up to you to watch the entire video to, number one, get the education, but number two, leave with a potential bag opportunity after this video. Let's get right into this. So the reason we're going to be talking today is about the stock market and the overall S&P 500. For those of you Financial Literacy 101 that don't know what the S&P 500, it is a culmination fund of the top 500 companies in the United States. And so all of those companies, whether they're doing great or bad, based off of their earnings and their gross margins and revenues, they are part of a fund that is created where people can invest into long-term for their retirements, pensions, whatever. So it's an indicator of the strength of the United States economy. And so what we are seeing now is that it just earlier this week made a new all-time high. And all of that is great. We're all very excited every time there's a new all-time high, because when there's a new all-time high, that means there are people making more money now than they've ever made before, especially if you're only invested into the S&P 500. But the issue is that there are cracks in that particular chart in the S&P 500 that is giving me an indicator, although it's not financial advice, that the stock market is preparing for a massive correction. Now I'm going to take us into the charts because I want to give you a little bit of financial literacy and investing 101 so you can understand what we are seeing on the chart and how are we interpreting it and what we are doing next as we prepare for what's to come. Follow me into the chart. Okay, so this chart represents the S&P 500 on the weekly time frame. So basically, you see a list of green and red little dashes. These are what's called candles. And each candle represents 1 week in the stock market. Okay. So as you can see, for the most part, it has been trickling upwards for quite a long period of time, which is absolutely correct. Now, as you can see here, there is a little bit of a dip here that occurred somewhere over here where you see the blue and the yellow line intersect. You see a red candle and a green candle. That time frame represents 2023 of October and November of 2023. What happened around that time that the stock market was so low? As you can remember, we were going through a rate hike journey with the Federal Reserve. And at this point in time, this was what they were indicating was going to be the last time they were going to raise interest rates at the end of 2023, which represented the bottom of this candle pattern. And so since then, we have seen an upward trend in the candles. All is good. But I want to point you here towards the bottom. And there is a list of other little candles on the third shelf below. Okay. And you can see red and green candles. But if you notice, the red and green, the size of those candles continue going downwards. That represents the volume, how much money is being invested into the stock market. So usually what happens is when we're on a bull run, we start seeing significant volume going into the market. But at the same time, we also see that the price in the stock market continuing to rise. That means everybody's fully invested, everybody's confident in being in the market, and it continues to put momentum into the bull run for longer and higher. But what we are seeing here is, and this is the term of the day, we are seeing divergence. Okay, divergence is when one thing is going one direction, but something else is going the exact opposite direction. And we are currently seeing divergence in the chart. The stock market is going upward, but the volume is going downward. And what that means is that for the most part, most of the money in the economy to invest into the market is not being invested into the stock market, which means people are ultimately waiting for something to happen. Now, with that being said, what are they waiting for? Well, they are waiting for the official correction to begin in the stock market to then pick up the money from the bottom, the stock prices, and then ride the wave back up, or they are timing the market to eventually short the market down and make money. So remember, there's always a bull run in the stock market. If the market is going upwards, that's the bull market is going upwards. But if the market is reversing, it's a bull market going the other way. And you can make money both ways, regardless of whatever direction the market is going. But not all companies are going to suffer during this correction. I like a couple of companies in particular to do really well. But one particular company that I like and that we're seeing, although it's not financial advice, is the company Baidu. Ticker symbol BIDU. We see Baidu as part of the Chinese sector, very much involved with AI integration in China. And AI is going to continue to be an ongoing thing. We are seeing a lot of momentum with Alibaba in our financial community, financial freedom builders. We've been talking about Alibaba since November and accumulating and doing call options. And people have made life-changing money off of Alibaba. But we see a similar setup and a upside available for Baidu. It's currently about $91. Our first checkpoint in Baidu, we see it getting up to, number one, is $120. Once it gets to $120, we may have to reassess to see if we're going to see a correction or a pullback. But if it continues the upward momentum, we can see Baidu getting to $140 from where it is today. So if you find yourself with opportunity to invest, Baidu is a company we want to aggressively be into right now, not financial advice. But as it pertains to the stock market correcting, what do you do to prepare? Number one, I would start accumulating cash immediately off to the side. We call that dry powder. It's having money available to the side, which is what's happening right now with the majority of the money in the market, which is why the volume is so low, as I showed you in the chart. So you start getting money ready on the side. For what, you say? When the market comes down, things are on sale. Perfect example. If the Jordans were $150, but then there was a flash sale and now it was $75, you would be more inclined to buy the Jordans at $75 knowing that it's worth $150. Same thing with the stock market. The stock market crashes, a lot of your favorite companies are going to go on sale. Although they're worth this amount, because of the correction in the market, it's fallen to this amount, gives us an opportunity to pick it up at a discount and ride the wave back up to the promised land. So I would be accumulating cash. The second thing I would be doing is that if you don't want to sell out of all of your positions, because I'm not here to tell you to buy, hold, or sell anything, what you can do is dollar cost average. So as the price continues to fall, you continue to buy a little bit more. As it falls again, you buy a little bit more. You keep nibbling at the discounts and following the stairs down in the stock price, which is lowering your average price position in that stock. So when the reversal comes, although we don't know how long it's going to take for it to reverse, but we know it will eventually reverse. But when it reverses, your average position has gone down so low that it's going to be much quicker for you to recover and start seeing gains on your investment. So either you're going to accumulate cash, get ready to buy more, or you're going to dollar cost average your way down. But if you really want to be really investing savvy, I would do both strategies. I would accumulate to the side and continue to DCA all the way down. And then once you think you are sort of at the bottom of where the price is going to be, then you can add more from the dry powder on the cash on the side. There's significant money to be made in the stock market in the coming months and over the next, I would say, 12 to 18 months for sure. Money is made when the market is going up, but generational wealth is made when the market crashes. And if you're not prepared, people are going to make generational wealth off of your investments because you're going to lose money unprepared as to what's going to happen next. And people are going to scoop up those discounted prices off of your mistakes in investing. So you have to be prepared. And if you need help along the way, you definitely need to be plugged into this channel. Be sure to like the video, subscribe to the page, share this with somebody you know. And again, be sure to comment below if you have any questions. And of course, let us know at the end, if you saw the previous video, what's the stock we were talking about that we made money off of, and comment below. And we'll see you on the next one.